Good evening, all. It's Sunday night. Shay Horowitz, ShogunTrading.com. This is a free weekly newsletter. First of all, hope you had a great holiday, whichever holiday you celebrated. There are actually quite a few of them this weekend, so it's a special weekend. The market had a short week last week. We only traded Monday, Tuesday, Wednesday, and we kind of traded on Thursday because it was a holiday and most people took off early. So this is a 5-minute chart on S&P 500, and the reason why I want to show you this is I want to show you how the market acted last week. On Monday, we had a pretty positive day, and the market finished on a very much of a high note. On Tuesday, the market gapped down and came down hard. On Wednesday, the market tried to penetrate the downside again, tried to come up, and then came all the way down, and then came up and finished up. And then on Thursday, the market gapped up and then kept going up and up and up and up and up. So, the reason why the market gapped up on Thursday, and gaps usually happen when there's a surprise, when there's some kind of an event that happens that warrants prices to move overnight. And usually the surprise can be positive, in continuation of the trend, or can be negative. And when I say negative, I don't mean that it's sad news. I mean that it's against expectations. And whenever it's against expectations, you see the market go the other way in a panic because people expect a certain direction, they took a certain position, and then when the market gaps the other way, they have to cover it, and they have to cover it in a hurry. So what happened on Thursday? Well, Wells Fargo came out and pre-announced their earnings for this quarter. Now, they're not supposed to announce right now. They're actually pre-announcing because their announcement was supposed to come on April 22nd. We're coming into earnings season. This was a great confidence booster for the market because Wells Fargo came out and they said the earnings are going to be spectacular. These are the banks that we just bailed out. We just gave them a ton of money. Now they have spectacular earnings. I know you feel great about bailing out banks that have spectacular earnings. And maybe that's a sign of things to come. Maybe all the banks are now going to have spectacular earnings while we are bailing them out. Yes, it hurts me to say that for some odd reason. But it's pretty obvious why banks are making spectacular earnings. When we eliminated the mark-to-market rule based on discretion, and we also let them borrow a ton of money for very low interest. The interesting part about it is when they asked Wells Fargo, "Are you going to pay the money back? Are you going to pay the bailout money back?" and they said no comment. They didn't want to comment about the bailout money, which I thought was hilarious. But anyway, so the market finished up, and that's very, very significant. Here's why it's significant. We're going to go into a 60-minute chart. And you can see how the S&P 500 penetrated that 840, penetrated that 845 level, which just changes the chart. It completely changes the way the chart looks. Here's a daily chart of the S&P 500. You can see what kind of dive we just went on. And you can see that now we're having a series of higher lows. If this is a low, this is a low, and now this is a low, which is a higher low, and this is a high, and this is a high, and now we're breaking this high, so we are trending up, and we're trending up above resistance level. Here's the thing. Once we broke the support level and we went down for a dive, we're in a very, very weak area. We were in danger of continuing a very, very long-term downtrend. And then we went up, and we penetrated this area, and we said, okay, that's fine. We penetrated this area. Let's see if there's any more weakness. And the market came back into weakness and penetrated the 800 line again. We were below 800 again, and we were worried again. And then the market gapped up, and I'm making a mess out of this chart. And then the market gapped up, couldn't break resistance, and we thought, here's weakness again. And then when it gapped up again, it totally changes the picture because now the danger of us diving back into the lows, into the 666 lows, are basically gone. We're free. The market is now ready to go on the long-term uptrend. Now, I have to be frank with you. I have a problem with fake figures. I have a problem with made up figures. If Wells Fargo has bailout money and mark to imagination, and they come out with stellar earnings, I have a problem believing that that's the reason. That's a reason to celebrate, and I think a lot of people are like me out there. But at the same time, you do not want to be caught short when announcements like that happen, because if you get caught short, you get nailed. If you get caught on the sidelines when the market is going straight up, your investors would come up to you and say, hey, how come you didn't participate in the rally? And this is the reason why, in my opinion, the market is going up right now, is because the short sellers are walking away. The short sellers are saying, you know what, I don't want any part of this. I don't want to get nailed every time they come out with a different announcement, and they're walking away. And the sellers are the same thing, and buyers are coming in. You know what, I thought the market was going to come down. I got to buy something. I got to buy a little bit, and that's why it's coming up. Well, it is pretty low volume, and I'm not super excited about it, and I know a lot of other people that are not super excited about it. But we are traders. We're not guessers or commentators. So we are participating in it. I mean, on Friday, for example, on Thursday, sorry, we had COF as one of our picks and was up 27% on Thursday. I got to admit, we were looking at the short side before that. The market looked very, very weak before that, and we took some money on the short side. We actually had all of the ETFs that are short, and we made money on them, and then they pulled back, so we got out of them, and then we switched on Thursday into the long side, and that worked out pretty well. Very unpredictable market, very dangerous market, but you have to be on the right side. Here's S&P 500 again. I love the S&P 500. I think it's the best one to look at. I'm going to go into a 15-minute chart, and we're going to look at the way the market is behaving right now. You see all of the sharp lines, all the these are interesting. These are what makes the market so dangerous right now. Because yeah, we are going up, but is it dangerous? It's very, very dangerous. And you can see gap, 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 gap. The market is gapping up and down on a daily basis all the time right now. It makes it extremely difficult. Yes, you see stocks are going up, but don't be fooled by the figures that you're seeing that the market is going up, all stocks are going up. They're not all going up. There are select few stocks that are going straight up, but most stocks are more in a mode of churning. They are getting whipped around by this action. So you have to stay nimble. You have to pick your battles. And what I mean by that is you have to look at the market and you got to say, you know what? I don't think the market is moving very well right now. I think the market is too sharp right now. I don't think the market really has a direction right now. And that's the day that you set out. Don't force your trades. And then when the market looks like it's setting up for a move, that's when you hit it. Now, here's one thing that I found that works extremely well right now is we are adding to positions. So you take a position with half position, with a third position of what you actually planned on, and then once the market takes off, once the market gets going, that's when you add, then you add, then you add, then you add, then you add. But if the market is whippy, if the market is choppy, then you only get chopped up on a half a position, you only get chopped on a third position. It's no big deal. There are plenty of pullbacks in a trend. That's the second point that works really, really well right now is pullbacks in the trend. If you're catching a trend, buy the pullbacks, buy the pullbacks, buy the pullbacks, buy the pullbacks, buy the pullbacks. By the time the trend is going, you have a monster position. You're able to really, really take advantage of a very, very nice trade. Anyway, be careful. The market is not what it seems. It is very different than what it seems. We are still doing well, and it takes a little bit more finesse, it takes a little bit more effort, but we're still doing extremely well, as you saw with the COF. Have a great week, have a great holiday, and I'll talk to you tomorrow. Take care.